great to have your company for the weekly this Friday, the 12th of March. I'm Jessica Amir, a market analyst with Bell Direct. Well, the economic recovery, it's snowballing. Business confidence roared to an 11-year high in Feb. Businesses are now running at above average capacity, suggesting economic growth will be stronger than expected this quarter. Consumer confidence soared just shy of its 10-year peak. Consumers are pretty chuffed that house prices are rising, the economy is growing quicker than expected, and the vaccine rollout is ramping up. About 90,000 Aussies have now had the jab. So where will the share market go now from here? Well, with better than expected economic news continuing to come through, fundamentals are continuing to suggest the share market will rise over the long term. But in the shorter term, we're now seeing two big changes. Investors are firstly readjusting their portfolios, reducing holdings in stocks that don't pay dividends and carry high debt, like tech stocks, like Zip, which fell 12% and Afterpay lost 4% Monday to Thursday this week. Both are growing their businesses. Heck, Afterpay even expanded into Europe ahead of target. But both stocks are now in technical share price downtrends, all because Australia's long-term interest rates are at 2-year highs. Now that increases their costs. But if you liked Afterpay trading at $160, you'll probably love buying it now at $111, right? Well, Credit Suisse and Morgan Stanley are still bullish with $145 and $159 targets. And don't forget, Afterpay is launching into Asia in September. So you could consider buying it at regular intervals at cheaper prices to maximise your chances of picking up shares at the low. So where have investors been investing their money? Well, they're buying into economic comeback stocks, commodity stocks, stocks with broker upgrades and stronger balance sheets. Travel stocks did really well this week. Their cash flows and earnings are set to take off because the government has offered to pay half-price airfares if you travel to one of those 15 named regional areas from April to the end of July. Remember, future earnings drive share price growth, right? Well, that's why Corporate Travel Management, CTD, rose 15%, Flight Centre up 13%, Qantas soared 4%, with all three of these stocks now in bullish share price breakout, suggesting they could grow further. Now, the second key major pivot this week, the broad market started to give off a short-term bearish signal. Now, this is why whenever the market hit daily peaks this week, technical traders quickly rushed in and locked in profits. Perhaps traders were looking at this chart. The market has started to trade around or below its 15-day moving average for the past 3 weeks, keeping it pretty much in a straight line. But on Wednesday, the market's 15-day average price fell below the 30-day average. Now, the last time this occurred was back in September last year, and that's when we saw the market fall 5% after that. So, with that in mind, perhaps keep some cash at bay, because if the market does fall, you can buy stocks you like at regular intervals if their share prices pull back. So in short, expect volatility to linger on until more Aussies are vaccinated, and that's when we're thinking that the market will move up and out of this zone. Now, the third consideration, there's generally always a bull market or stock somewhere. So there's a lot to be said about diversifying your portfolio in an effort to find outperforming stocks. So in this new environment, it's really vital to stay nimble and not just look at companies that are growing their earnings, but to also find companies with share price momentum. So doing that can help you outperform the market in this next cycle. So you can find stocks pretty much after just a few clicks if you use the right tools. So if you head to Bell Direct's account, your Bell Direct account, head to Research and Tools, then Strategy Builder. You'll see stocks that meet key criteria like profitable companies that are undervalued. There's 20 stocks there. You can look at the 33 rebounding value stocks or the 14 stocks with strong share price momentum. There's much more to choose from, but today I've just selected momentum. I can see Vocus, Tao Commodities, Pact Group, Australian Vintage, Jamison Education, Element 25, Cadence Capital, AVR and SLA. Now, all of those shares are trading at double digits. That's how much they've gained in the last 4 weeks. That's outperformed the market. And you could expect to see further share price growth. And then what you can do is click on the company to find out more information, or you can also go straight to the company's website to get a sense of how these businesses or the businesses that you select is creating value for shareholders. So I encourage you to use the Strategy Builder tool on our website and also consider taking positions in stocks that you like after doing your own research. I'm Jessica Amir with Bell Direct. From all of us, have a happy and safe weekend.